Hello traders. Welcome again to Backtested. Does the simple strategies really work? Or it's just hype? That's what we will see by doing a quick backtest. So briefly, we're going to test the exponential moving average 200 on XRP with a 100 balance and 10x leverage. And we will see if it works or not. I will show you the stats and the chart and how I backtested the strategy. So stick around. So we will start by heading to the Crypto Backtesting tab on the navigation bar. But let me first explain the setups so the interface doesn't get confusing. For starters, the risk reward is 3-to-1, and I mean risk 1% to profit 3%. We enter sell setups after the price closes above the moving average, and we enter by positions when the candle is closed below the moving average. With that being said, let's continue the backtest. Now I will select the conditions and the indicators of buys and sells. Starting with the buy side, I will select single moving average and then choose a type, which is exponential moving average, and then input the period, in this case 200. And after that, I will choose a condition of the entry, which is price should be below the moving average. And for the sell side, it's just the same configuration, except the condition, the price should be above the moving average. Now, after we define the strategy to the software, we will go ahead and set the balance to $100, something that a beginner would start with. And as you can see, the strategy is tested on 24 hours, meaning we didn't specify a certain session. And we have also selected the asset to be XRP USD and left the time frame to 15 minutes. Set the TP to be 3% and the SL to be 1%. Also, we enable the skipping of orders if there is already open trades. Press backtest. Wait a few seconds to get the stats as you see. And yes, it made money. It's small due to the small sizing, which we will try to change later. And here you can see 77 trades with a 36.36% win rate. But thanks to the 3-to-1 risk reward ratio, we managed to make profits. Down below, you can see the profit factor 1.72. That means for every dollar you risk, you gain back 1.72. Think it like the risk reward ratio that the market gives you. And now we will go back and change the sizing and see. Let's increase it to 100 instead of 1. That should reflect on the return. Press backtest, and we wait a bit. And apparently we didn't have any trades, and that's because of the account balance. So we will add leverage in order to give the account the capacity to handle larger orders. So in the account settings, we will set the leverage to be 10x, and this should be enough to handle our orders. All right, now press backtest. Speaking of pressing, press like and subscribe. Be a part of Backtested. And there you go. The stats are ready. As you see here, the return now is 72%. And that's why leverage is powerful when you know what you're doing. The other stats are the same as before, which is not bad for a simple strategy. Now, let's move to the chart to see the setup and see also the trades history table for better analysis and maybe have some ideas to improve the strategy. If you take a look, you will see that we are selling when the price is above the moving average and buying when the price is below the moving average. And it seems crazy because in the trader mind, it's like if the price is above the moving average, that means the direction is bullish. So I should be buying, but the idea here is to wait the price to reach above the moving average, and we sell aiming for reversion. And when it comes to the buys, we wait the price to go below the moving average, so we buy at a cheaper price. So that was the idea and the test results. Now, down below you have the trades history. The negative size values mean sell positions, and the positive values mean buy positions. So you don't get confused. That was the end of the video, guys. Make sure to like and subscribe so you don't miss backtests and updates. And if you want to make your own backtest, make sure to visit backtested.net. With that being said, thanks for watching.